What will get people's attention is talking about the banana zone.
Oh, God.
When banana, we've been debating, do we focus only on the banana? Do we ask him about his thesis behind it?
Nobody cares. They just want when number go up. When does the banana hit?
That's why everyone's asking us to ask you.
And I just did it on stage. It's like, look, it got delayed because of this whole liquidity drain that went on because of the government shutdown and the various other parts of the plumbing system. But when you look at it, 2026, they've got to roll $10 trillion of debt. The only way of doing it is by injecting massive amounts of liquidity. So we saw it yesterday. The central bank went from quantitative tightening to we're going to stop that to we're going to start printing money again. It's telling you what's coming. So it's just a matter of patience. And it's like nobody in this space has any patience whatsoever. It's like we want it to go up 100x tomorrow.
The average hold time is 4 minutes.
I know, it's ridiculous.
It's insane.
And it's like you just don't need to do anything but just hold on to your tokens and just wait. And so it's all coming. So the banana zone is coming. It's 2026. It got delayed.
Just hold your breath.
Yeah.
Okay.
Just hold your breath.
So
stop being impatient.
Impossible. You're talking to the wrong crowd about being
I
impatient.
understand.
Yeah, we are so impatient.
I know, because everyone just wants their money.
Yeah, I think we've been spoiled as well. I mean, we were talking to Anthony Scaramucci a second ago. We were talking about, the ethos of crypto, and at the end of the day, a lot of people come for the technology. A lot of people come for the ethos.
I don't trust that he's wearing a tie. I was chatting to him now. What the fuck are you doing wearing a suit and tie?
Why? So we could put the microphone on him. He did it for us.
I think he's trying to sell something. It's the only reason he puts a tie on.
Yeah, I know. It's terrible. No, we love Anthony Scaramucci. We love his spicy takes. Curious though, if people are obviously extremely impatient. People came for the technology. People came for the underlying ethos. But 2016 to 2018, there was a lot of wag me energy because you could basically throw your money anywhere and it was going to move.
Yeah.
Right. There was many banana zones.
Yeah.
Those days are long gone.
I don't think they are. I just think you're just looking back over last year saying, well, we didn't get nice things and therefore it's all over. There's too many tokens. It's never going to go up again. We've gone back a year and a half. You're like, look at fucking meme coins. We're making a fortune. Everyone forgets. And everyone has a pain tolerance that is minute. So you have a year that's been choppy and miserable, and that's it. We've all given up. It's ridiculous.
Is there too many tokens? Have we oversaturated this idea that everyone can have their own token and that has plateaued where we can go?
There is too many tokens, but there's too many equities. There's too many everything. It doesn't mean if you choose the right thing, it doesn't mean that any old shit goes up. It never has. When we look back, it was like, oh, everybody made money at ICOs. No, there was a bunch of stuff that didn't go up at all.
I didn't.
No, I didn't either.
Why? Yeah. Made some, lost more.
And if I go back and look at my wallets of shame for the previous cycles, there's a whole bunch of shit I've had in my wallets that haven't gone up. So people kind of, it's backwards fitting because they say we didn't make money, therefore there's too many tokens, therefore crypto, I'm disillusioned with the whole space. You're seeing that argument on Twitter now, rage quitting the whole thing. It's because nobody's got patience.
Right.
Just need to zoom out for a little bit.
However, there's 6,000 people here over the course of 3 days, granted, but degens, DeFi OGs in the same room as trillion-dollar asset managers, as DACCos, as ETF issuers. That's surely something to be proud of.
Oh yeah. I mean, from when I first got into the space, we said we were going to front run Wall Street. That was 2013. We've always said it, and here they are. When I've been speaking to the sovereign wealth funds here this week, and they've all got crypto on in their books now.
And they're openly talking about their allocations.
And not only that, but the Treasury Secretary of the United States, who was an ex-macro hedge fund manager, friend of mine, he openly talks about how important it is. We've got Donald Trump talking about it. We've got everybody talking about it. We've got every financial institution building on stablecoin rails. We've got once the Clarity Act is passed, then all of the banks will start building out their crypto rails for everything. We've got people like the NASDAQ talking about tokenizing all equities. And people are like, well, that's never going to happen. It's time to rage quit.
Yeah.
Really?
Yeah, and
You've got 10 trillion of liquidity coming and the entire financial system, which we've been able to front run, coming into the thing, and we're going to rage quit.
One of Anthony's big points was that the passing of the Clarity Act is one of these big obstacles, and that once we get past that, it's not open skies, but the ceiling goes a lot higher. Would you share that view?
Yeah, absolutely. And if you speak to everybody, the banks need the clarity, the asset managers need the clarity, the corporations need the clarity, everyone needs the clarity of the Clarity Act. Once you get it, it's the green line. They're all waiting for what exactly is, which things are securities, which are not, how does it all work? And once you've got it, we've got a roadmap. And everybody wants to go. Everybody wants to build on these rails, particularly the financial system, because it's so efficient and so fast to do things that they're incentivized to do it. And if one of them goes to rails, so if MasterCard does it, then Visa has to do it.
Yeah.
You know, if PayPal has to do it, Venmo has to do it, or whoever it is, you know, it's all the same thing. So it's a bit of a supermassive black hole. But again, we get to front run it because this is just the start of them coming.
Okay, on that, we talk about project crypto, we talk about tokenization of all assets within 5 years. What's to say that happens on public blockchains like we like, rather than, you know, the state putting that into a walled garden that they have full control over?
So, yes, we'll have all of it. Some
Everything's
will be
spread out
on
everywhere.
open permissionless blockchains, some will be on layer 2s that are more tightly controlled, others will be on some private blockchain, and the markets will figure out what's more efficient, what has more security, what makes the most sense. But there's enough space. I mean, you know, if you look at the total size of all asset classes in the world, it's $880 trillion.
Can't even fathom
Yeah, that's
numbers
an
that big.
unquantifiable number.
Yeah.
Right. And then if you look at
honest,
global derivatives like $2 quadrillion. There's plenty of money to go around. It'll work across all of the different spaces and people figure it out.
So the news this week, 25 bips cut.
Yeah.
Potentially, was it $40 billion of monthly treasury purchases? As you said, they're turning the tap on again. Is that enough though to give us sort of a Christmas pump, or are we looking at Q1 for sort of the impact that to be felt in our industry?
I don't actually know because we've got problems with actual liquidity in the banking system right now. And we've got to get through year-end funding for the banks.
Right.
And there's not enough liquidity. So I actually think the Fed will have to come in with another liquidity measure to get through this. Is that enough to pump our bags? Don't know. But then they had a big change. Always when the Fed or the Treasury talk about a 3-letter acronym and they say it's nothing, it's just a
Trying to
technical thing,
obfuscate something.
it's usually very big. This one was the SLR or the ESLR, which is the supplementary leverage ratio. It means nothing to anybody. What it basically says is the banks can now buy more treasuries because they've lowered the risk weighting of treasuries in the banking system. So that means the banks take the treasuries directly from the treasury who issue them. They sell it to the banks use that as collateral to create more loans, and that creates a huge amount of liquidity within the system. The moment that got announced, it was kind of rushed through last week or the week before last. It got announced, it's coming January 1st. And you all have to implement it by April. Why? Because they need to roll the debt and they need the buyer. So they're going to stuff the banks to the gills with this stuff. But even more so, the moment it was announced, Steve Mirren, who has been kind of the orchestrator of a lot of this policy, he said, oh, but that change is not enough. We want to get rid of risk weighting entirely for treasuries, which is basically saying we want open-ended ability
Money
for
printer.
us to print the money and stuff the banking system and let them create credit, which is also what drives this whole thing that Scott Besson talks about, which is like Main Street over Wall Street. What he means is QE itself, direct QE, just lowers the denominator, makes the assets go up.
Yeah.
But when you do it by the banking system, loans come in.
So we talk a lot about flywheels, and based on what you're describing there, I get the sense that this could contribute even more to the debasement trade.
Yes, this is the liquidity.
This
is where they print the money, and as opposed to putting it on the balance sheet, or as opposed to using the reverse repo market, this is the next mechanism.
So what has prevented then? We're talking to a chief investment officer of Bitwise, Matt Hogan, shortly, in his thesis going into Q3 and Q4 was that towards the end of the year, a lot of these asset managers are going to have to prove to their clients that they understand the debasement trade, and that they're going to have, put more capital into risk-on assets like Bitcoin, like crypto in general, like the ETFs, like even potentially digital asset treasuries. That hasn't necessarily played out to the same extent that they expected it to. So if we're moving towards...
Because of this liquidity air pocket.
Because of this, okay, yeah.
That's what caused it.
That's
Caught me
the
off guard,
yeah.
because because of what happened is the Treasury built the Treasury General account, and we didn't have the reverse repo to drain because it was already drained. We had no offset. So that just took money out of the system. Furthest out the risk curve is us lot in crypto. So it's the Wile E. Coyote for us as we go off the cliff. NASDAQ kind of got to the edge of the cliff and it was kind of okay. So we are the most sensitive to liquidity. So when it's being withdrawn, there wasn't enough liquidity for us and equities and all the other stuff, so we lose the liquidity. But when it comes back, we're the most sensitive. So we go up most.
By the
So
dip.
it's more reflexive.
It's by the dip, yeah. Of course it is.
I want to be the wet blanket on this on this optimism. Have we still got some contagion to play out from the mass liquidations on 1010? Is there still some skeletons in closets that are going to reappear?
It's
that
a
could-
hot topic.
that could
It feels-
postpone this a bit longer.
It feels that something is going. One of the things that's in my head is when you have a multi-standard deviation move, it affects what's known as VAR, value at risk, and it's the models that market makers, banks, hedge funds use. And what it does is they widen, they can take less risk, and so they widen things like bid offer spreads, so there's less liquidity. So when you have the event like 1010, it then forces less risk taking, and it takes a while, and we don't have the liquidity around. So I don't know if somebody went under. It felt that way because that selling that happened every single day looked
Systematic.
like somebody got done in that. And it wasn't just OG selling, which was the narrative. It's like something happened somewhere, but we've not seen it.
But we don't know yet.
We all pointed fingers. It's like, it's there, it's there, it's there. So far, we don't know.
It wasn't my $28 portfolio game. Question from the community. 4-year cycles.
Yeah.
Are they dead?
There never was a 4-year cycle. It's based on the debt refi cycle, which was 4 years, but then in 2022 they extended the debt maturity out by another year, so it's now 5 years. So it actually took me a while to figure this out as well. Is that okay? So now this time it's going to be 5 years. What's the next cycle? We don't know until we see what the debt maturity is at the end of this cycle. So it's 5 years. So there's no magic Satoshi given from the gods. It's 4 years and you shall have 4 years. It's none of that bullshit. It's to do with macro, it always has been. It's to do with the debt refi cycle. So if we've got about $10 trillion to roll in 2026, that's when liquidity comes. That should be the end of the cycle before we come down the other side again.
Another one of these questions is, I think going back to your thesis from a couple of years ago, that young people have about 5 to 6 years to
Unfuck their future.
unfuck their future.
Yeah.
So what are things that we might do in the next 12 months to fuck it up?
Oh, what you can do to fuck it up? Oh, there's so many good methods. One is to listen to your friends.
Okay.
Generally, we've all got that bag of shame. And in that bag or wallet of shame has the meme coins that your friends pumped to you, all of that stuff. So that's a really good way of destroying money. The other good way is definitely use as much leverage as you can, because you are going to, with 100x leverage, you're definitely going to make your fortune. Definitely. So that's a way of fucking it up really well. The other thing is just click on any website, particularly if in an NFT space, stuff like that. Just click on all the links anybody sends you.
Mint everything with a roadmap.
Particularly those messages you get on Telegram. Just say, hey, here's a free mint for you. Do that and make sure you keep all of your assets in your hot wallet.
On your phone.
On your phone.
Yeah.
That's a really good trick as well. It's generally, those are the ways definitely you can destroy your own capital happily.
And it seems to be easier than ever to do that as well.
Yeah, but it's really interesting because I do adhere to my own don't fuck this up thesis where like 10%, I don't think I've even got to 10% in the degen stuff. But I look at it now, I'm like, it all lost money, not a single trade. And that's the other simple thing is don't fuck up time horizon. People are so driven by the adrenaline of short-term charts. Whereas the way to make money in this space is actually boring. It's to do nothing. It's like take your tokens, put them on your ledger device, put it somewhere else, and don't do anything. But Christ, that's the hardest thing in the world to do. Because oh my God, my mate's making money in this. I need to do.
It's so hard.
Can you understand that sense of urgency? If people have this idea, they have 5 years to unfuck their future. So that is a short-term time horizon in the span of a life.
I do get that, but you've got the best performing asset class in all recorded history,
Yeah.
and then you're trying to apply leverage to it, and you're trying to apply leverage in illiquid meme coins. It's like fucking crazy because your probability of success is really low.
Yeah.
So I get it, and particularly a year like this, everyone's so angry and frustrated because they didn't make money. But you can, even by a sensible asset allocation mix, have a safe asset like Bitcoin. You can go further out the risk curve, you can have Solana, then you can go further out the risk curve, and you can have like a barbell strategy. Over time, it'll work well. I mean, Don't forget, Solana from the low, $8 to, what did it hit? $200?
Yeah, 250. Yeah.
Higher. Didn't it hit 290?
280, yeah.
Yeah.
Okay.
On the daily chart.
That's a pretty bloody good return.
But
that happened in two.
That was a good time, Raoul.
That was 2 years.
Yeah.
Everyone forgets that.
Yeah.
No, it's gone nowhere now. Look at it, it's rubbish.
Yeah.
You can never make money in crypto. It's all over. It's
Most
really?
obvious question there is, are we still in a bull run?
Yes. Are they going to print money? Yes or no? Yes.
So hold your
Therefore,
breath.
number go up.
Hold your breath, don't fuck up.
Yeah, it's just, nobody likes it, but you just have to learn patience. It's because I get it. It matters to all of us, right?
Yeah.
Because we are front running Wall Street. We know we've got an asset that goes up over time. We know it's getting bigger adoption. You're here at the Solana event. You can see adoption. You can see what's happening. We've got sovereign states talking about it. You just need to let it play out.
So on that note, moving all the way away from the degen side of the spectrum, we've got ETF issuers here. We've got sovereign wealth funds, the $1 trillion asset managers. How does it feel? Is it like a natural progression of maturity, of industry maturity, of ecosystem maturity, and we should just welcome it? Or do you get the sense that it was a bit of a trade-off and we've lost some of that core identity that we once had? Where do you stand on that?
You can't have an asset that we say is, let's say with Bitcoin, right, a superior form of money or collateral, and then want adoption, and then say, but you can't have it because you're a financial institution. It's bananas. So I get it. It's not in the format people want, ETFs, blah, blah, blah. But I just think of it as all of a Trojan horse. And what we're doing is bringing in a new system of money, a new system for the internet, all of this stuff. So I don't mind. But what's really interesting is when you speak to these institutions, they're still so early in their journey.
Yeah.
It's their first year of looking at stuff. They don't know how to value it. But it's like, I buy some of the ETF. I need to understand how to think about the risk. It's like us when the first time you get into it. So they're really early. So they haven't gone through the manic cycle where they've made all the money. They haven't lost the money yet and then come back and figure out how to do it. So they've got a long part of this journey to go.
I guess a lot of people are quite excited about the fact that these asset allocators tend to not trade with a 24-hour time horizon as well, right? They allocate. You wrote a piece about this not too long ago. Might be 12 months, might be 24 months, and then not looking to necessarily touch it for too long. So that gives me hope that we're sort of maturing as an industry, but it is something that people raise as a question, like, what have we lost in the process?
I'm not sure we've lost anything because, again, we're early in how this plays out.
Yeah.
But what we're doing is actually saying, well, if you strip back, Wall Street's saying, this is a high quality asset that has a moneyness to it, that is good quality collateral, and therefore we were right. We were right. That's what we said about this thing.
We were right.
We were right. And that's what's happening. And we will be right again when it comes to the whole idea of Web3 and how we can move the rest of the internet. People don't believe that's going to happen now. People are crashing out about this idea. Of course it's going to happen because it's much more efficient.
Okay.
It's a better way of doing it.
On that, now that the institutions are here at much scale, and they're at these events, who's the marginal buyer after these institutions, these TradFi players? They're arrived. We can't say they're coming because they're here. So what happens next?
Well, let's remember there's $880 trillion of assets held by, many of them are held by these institutions. What is the total size of the asset management industry worldwide? I have no clue, but it's got to be $100 trillion.
It's a lot of zeros.
How much have they allocated? Well, the largest, one of the largest sovereign wealths here, I think has $500 million a bit. Okay, that's all. And they run between the various sovereign wealths here in Abu Dhabi, they've got about $1.8 trillion. And they've got 500 million. Maybe a few have got some more. So maybe they've got $2 billion. They've started yet. So the marginal buyer is them.
It's a funny range of perspective because we see a 5% move on Nvidia and we realize that that's the entire market cap of the entire crypto industry. Yeah. So it does kind of help us to.
And also don't forget, that's Bitcoin. What the rest of Wall Street's saying is, hey, we love this network technology, this database, this decentralized distributed database, and we want to build on it. And what is that? That's demand for our tokens.
Yeah.
We're building on Solana. We will have huge demand for Solana over time. But it hasn't started yet. So we can't talk about the end of the game, who's the marginal buyer, when the elephants come into the room we've gone, oh yeah, we've seen the
Go,
elephant.
who's after the elephant?
Yeah, it's like, really? I mean, there's nothing after that. That's the entire adoption of the thing. But for smart contracts, yeah, there's the whole adoption of the internet. The whole everything from digital identity to the ownership layer of the internet, things like ticketing, all of the things that we use contracts for, that'll all come as well.
2024, great year. 2025, even better year, arguably. 2026, what's the single
Was
biggest?
2025 a good year?
I mean, look at all these institutions that are here. They saw the retail adoption by, most measures.
Oh yeah, in
decided
terms
to
of
take it.
We got Sol ETFs, I think,
Yeah.
positive.
yeah.
In terms of maturity
and staking and all
stake,
that.
regulatory clarity. Okay, I mean, we're maybe poorer than we were 12
Just
months ago.
was it a good year?
I mean, I'm not loving the fact that I'm poorer than I was 12 months ago, but I think as far as the industry goes, as far as Solana goes, it was a relatively good year. So,
Yep.
2026, what's going to be the reason why we look back at the end of the year and say it was also a pretty good year?
Liquidity. It's just what you're going to see is this nexus of liquidity coming in, us getting more money from tax stimulus and other stuff, fiscal stimulus,
Yep.
and the Clarity Act going to Wall Street accelerating. So you've got demand and debasement happening at the same time. That to me feels like it's got to be a high probability that we have a very good year. Not just a good year, but a very good year. And that's the bananas that we talked about at the beginning.
So if I was to really pressure you to say what are you most excited about in 2026, you're going to insist it's liquidity.
Yes, because 90% of all price action in Bitcoin and crypto overall is explained by one macro factor, liquidity. 90% correlation. With the Nasdaq, it's 97.5%. We've never had this dominant a macro factor in history. So we don't have to care about one thing, which is why I always say when people ask me about all the things, tariffs or whatever, I say it's all noise. Because if 90% of all price action is explained by one thing, then that's all we care about.
Everything else is a rounding error.
It's all a rounding error.
Unfortunately, that's all we have time for. Raoul Pal, thank you so much for joining us on SolanaFloor today. I really, really appreciate it.
Enjoyed it.
Thank you.
Cheers.
Thank you, Ralph.
Thanks a lot.